Good afternoon and welcome to PBA at Noon. I'm Paul Benwell and I'm joined by my colleague Sophie Caesar. Today we have with us Norsemont Mining. Norsemont, which trades on the CSE under the ticker symbol NOM, owns 100% interest in the Choquelimpie Gold silver project in Northern Chile, a previously active gold and silver mine. As many of you know, Chile is a traditionally mining-friendly and geopolitically stable jurisdiction with a well-established history. The project covers 5,700 hectares with year-round access, with over 1,700 drill holes, and has a previously producing 3,000 ton a day mill plus infrastructure on site. Norsemont has put together a world-class, award-winning exploration and development team with unparalleled amount of experience in the mining, finance, and business sectors. From the team, we have with us today, Mark Levy. Mark, please start whenever you wish, and we'll have some questions for you at the end. Thanks so much.
Thank you. I'm just going to try and share my screen here. So here, I'm the CEO and chairman of Norsemont Mining, and I'm going to tell you a little bit about the Choquelimpe, which is a past-producing gold-silver mine located in Chile, in northern Chile. As Paul said, Chile is a very safe place to operate. We acquired 100% of the asset from a company called Copec, which is the largest conglomerate in Chile. They were exiting the gold sector and getting into the copper sector in Peru. We've got an historical resource of over 4.1 million ounces of gold and 62 million ounces of silver. The project was worked on in 06 through 08 by Rio Tinto, who did some analysis and work to conclude that there's also a large copper gold porphyry beneath the surface, which is probably the system that drove this project and the resource at surface. Shell used to own it, and it was a producer back in the late 80s and early 90s, and then Northgate as well did some production on it. So it was the third largest gold producer back in the early 90s in Chile. We see a lot of upside in the project and as well the porphyry target. I'll get into more details. It's just the ownership structure of the previous owners as well as ourselves that own the company called Sociedad Contractual Minera Via Coya, which is been the owner for a very long time now. Myself, I'm formerly the founder of a company called Norsemont Mining, which operated in Peru, and there was a copper deposit called Constancia that we advanced and ended up selling to Hudbay Minerals for $520 million. Been around the resource sector, cannabis sector, technology sector, raised a significant amount of money. We were also the controlling shareholder of Petaquilla Minerals, our team, and we sold that to Inmet for $350 million. I'm one of the founding shareholders of Coal Hunter, which was a coal company in Canada that we sold for about $50 million. And then recently I was one of the co-founders, the three co-founders of Aurora Cannabis, which a lot of people have followed in the cannabis sector, which isn't doing as well, but peaked out at about 16 billion. We did very well with our early investors on that, as well as our shell did Curaleaf, which is one of the larger cannabis IPOs in 2018. We've been involved in several cannabis plays, as well as I was a founder of a company called Payfirma, which we privately sold to Merkle Payments. So I've got a lot of experience in capital raising and creating exits for shareholders. Our next director, Bill Katsouras, is a former EVP and director of Endeavor Financial and Endeavor Mining. He's the chairman of Wheaton River Precious Metals International. He's had a lot of experience in M&A. He's done over 25 billion in mergers and acquisition and raised over 4 billion in the small mid-cap sector, primarily in mining. So a very valuable guy from a corporate finance perspective. Kulwant Sanders, our CFO, he's done several NASDAQ IPOs. He's got an engineering degree as well as a CA degree here in Canada. Art Freeze is a director from the past, which worked with me on Norsemont 1.0. And he's been around the resource sector and worked in South America and Peru and Chile, He's the primary consulting geologist at Goldcorp and was the chief geologist at Wheaton River. And then the next director, Charles Ross, who is our lead director, is involved in the mining sector and structuring resource deals and resource companies and finance. Been involved with several large mining opportunities as well. Soren Pasescu is one of our advisory board geologists and got on board recently. He had looked at the project back in 2018 with Rick Van Nieuwenhuis, one of his partners, and they looked to acquire Choquelimpe and ended up not being able to acquire it. I guess bad timing for gold and finances. Another key guy on our team is David Lang. He's our chief engineer and advisor of our chairman of our advisory board. He was the COO of Equinox Gold and several other large mining companies. He was also a director with Endeavour Mining, and he's done over 25 billion of M&A as well, worked for Standard Bank, Bema Gold. And as well, he put Choquelimpe into production back in 1988 for Shell. So he was born in Chile. He knows the culture, knows the language, and obviously he knows the project inside and out because he was there when it first went into production. So he's a very valuable person on our team from a technical perspective with an engineering background. Paul Fornazari is an advisory board member. He's Chilean, out of Toronto. He's with a large mining firm. And then Tom Henriksen's our consulting geologist. He was our VP exploration, our chief geologist at Norsemont 1.0. He came to me from Rio Tinto, and he's been involved in several major mining discoveries, a lot of work he's done in South America. And then Jamie Alcazar is our senior geologist who's been with the project for many years and working with us now. Chile, as Paul said, very mining friendly, stable jurisdiction, #1 global copper producer. Project itself, one of the key aspects to the project is we've got year-round road access. We've got it because it's a former producer. We have an ADR effluent plant. We've got power on site, backup power on site. We've got water permits. We've got 2 wells that are drilled and operating, and we have 2 additional wells. We've got a 3,000 ton a day mill, fully equipped camp, offices, lab. And so the entire infrastructure of Choquelimpe is probably worth about $200 million today dollars, which was a very valuable piece for us to inherit with the project, as well as we've got mining permits in place as well for certain aspects of the project. There's been over 135,000 meters of drilling in 1,700 drill holes, which ballpark would cost you about $50 million to do the actual drilling, the analysis, the work involved with assaying all that core, which we do have all the core on site. This is our global historic resource, which is 216 million tons at 0.6 gold and about 9 grams of silver. There is some copper content. So there's about 5.5 million ounces of gold equivalent in the ground, proven. This is 2 pictures of a cross section of the Choque pit, Surrey pit. The brown pipes going down are breccia pipes. I'll explain that just a little later. The project itself has had about 5 kilometers of its 27 square kilometers with some exploration work. So there's a lot of upside in the project. 80% of the land hasn't been worked on yet. Some pictures of our core. This shows some of the targets that we have to increase our oxide resource as well. There's an additional target over here, the PROA gold oxide target, which is 3.5 kilometers from the main Choque pit that you see here in blue. So there's a lot of upside in the project. You can see there's 54 meters of 1 grams of gold, 22 grams of silver at 10 meters depth in one of the drill targets there that was done this is all near surface. So one of the key aspects of why we like this project is on this slide. Primarily, most of the resource has been drilled down to 70 or 80 meters. So we believe that typically these type of high sulfidation epithermal gold silver systems typically go down to about 200, 250 meters. So we believe there's an opportunity to multiply the resource based on drilling to depth without having to go and step out on exploration side. And you can see here some of our priority targets here to go down at depth as well as along strike here. These brown areas are breccia pipes that go down probably about 300 plus meters. And that's where you see a lot of the high grade drill holes. You can see 14 meters of 8 grams of gold, 8 meters of 7 grams of gold, 2 meters of 19 grams of gold, and obviously high grade silver content and copper is in this is the Choquelimpie pit area. And then in the Surrey pit, there's quite, 16 meters of 7 grams of gold, 10 meters of 23 grams of gold, 5 meters, 48 grams, 2 meters of 340 grams. So you can see there's very high grade, all at surface, which is critical to building out an open pit resource. We believe that we can increase the resource, multiply the resource, and increase the overall grade at surface on the project. These are some of the highlights in some of the different zones of some of the drilling we have. I mean, you can see a larger intercept of 118 meters of 4 grams of gold. And we can go to other ones like 32 meters of 35 grams of gold, 2 meters of 129 grams of gold. So you can see here, there's quite 8 meters of 100 grams of gold. There's quite a lot of high grade at surface that still needs to be explored to depth. And that's part of the game plan we have. Choquelimpe has been compared to a project called Lepanto in the Philippines, which has about 20 million ounces of gold and 10 billion pounds of copper. That's our target, is we believe we can take the project to somewhere in the vicinity of 20 million ounces of gold equivalent. So it's a very large target with an existing good base. We have a lot of exploration targets. There's an 8-kilometer strike here with half a dozen plus targets that we want to expand our drilling and increase our resource in various zones there are. This is the metallurgy was very good when we acquired the project. One of the key things we wanted to do due diligence on is making sure we can get the gold out of the ground. And in the heap leach, they were getting over 90% recoveries, and in flotation, they were getting 87% on the gold side. And these numbers are older numbers. So there's a lot of room for improvement for newer technologies out there to be able to increase our recovery. So there's going to be a lot of upside in using more modern technologies to increase the recovery rates and overall financial capacity of the project here. The project itself is located in the Arica region, which is a economically depressed region. We have the ability to get a 30% tax credit on any construction machinery and equipment that we put on site. So our cost of putting this into a large scale production situation would be reduced by 30%, which would increase our IRR, our return on capital, and our CapEx, and probably provide for a much shorter return on capital. So there's a very unique benefit to the project itself from a tax perspective in the area. There's also a 40% tax credit on real estate and construction. We don't know whether that applies to us building out a 100-man camp that we would end up having to probably do for a production type of situation. So we're exploring that. We've got 51 million shares issued outstanding. We've got over 8.5 million in working capital in our treasury. And on a fully diluted basis, with all the warrants and options we've got outstanding, we have about $27 million of capital available to us. So we're in a good cash position. We don't need any more money. We've got $6 million put aside for a drilling program. We're planning to do 6 deep holes to test for the copper gold porphyry target beneath our existing gold silver resource. And we'll probably do up to 80 holes of shorter 200, 250, 300 meter holes on the gold silver target to increase the grade and get a larger resource and obviously a more robust project. So basically, in a nutshell, we've got a great opportunity with an existing infrastructure. We're very well capitalized. Our share price is trading in the lower end of our market recently. And we've got a good opportunity here for a project to double and triple the existing resource that's already in the ground here and fast track a production situation for our investors, or create an exit, which we're quite famous for doing. A lot of people talk about selling their company. It's not as easy as one would think, but the board we have, the team we have, we've done this several times before, and we'd love to be able to de-risk the project and possibly sell it to a larger or mid-tier gold producer and be a part of that company in a multi-project production situation. So I think that's kind of it in a nutshell. I don't know if I went too fast or if we want to open up to some questions.
It's perfect. We have some questions.
Sure.
Thank you so much, Mark. Actually, and you just touched on that. So one of the questions was, is your goal to go into production soon, or you wish for a buyer? So I guess that's it. You're looking for a larger company to come in and take this
Yeah, a
over.
lot of people do talk about that, and you don't want to just say, hey, we want to sell the asset once we drill out a resource, because lots of those resources get left orphaned. The beauty for us is that we have done it several times before. Obviously, our team has done over 25 billion in M&A, so that helps open the door for a seller. Some of the people that have funded the company are coming from mid-cap and large-cap mining companies, so that's also got eyes on us. And the better part of it is we can truly fast track this to production. We've got water permit in place, mining permit in place. We've got an existing mill that we would want to increase, obviously, dramatically the infrastructure. So there'd be an infrastructure investment, but we can fast track this project and be in production. And so we do have that option, and we do have the engineering capacity on our team, and we're bringing on a few more people on the team that will demonstrate that we can put this in production ourselves, which is the best threat to have someone acquire us ultimately.
Okay, great. So it brings me, you're going over a lot of these questions, but so are you fully permitted on everything?
So there is 2 areas that are permitted for existing mining infrastructure. In order to get a mining permit on new areas that we discover and drill, that'll require a permitting process. But in the meantime, we'll have the ability to start a production situation with starter pits and starter ore, and work through the economics of how this can be put into production most effectively.
Okay, thank you. Here's one that we often get asked, and I know it's very difficult for you to answer, but what do you think the blue sky is on this project?
So according to our geological team and our engineering team, based on the size of the project, the targets we have, we are, and we've publicly stated that we are targeting up to 20 million ounces. And we believe that because the project was only drilled at a very short depth, because it was all done in the late 80s, where they were just looking at grabbing whatever was at surface, we believe that we can increase the project 3 or 4-fold here.
So then do you anticipate updating the 43-101?
Yeah, we will have we should have a 43-101 resource estimate coming out at the end of this year. We're trying to get our resource geologist, Scott Wilson, that we hired to get out to the project in early December and complete his site visit and be able to put out a resource estimate at that time. And we do have one thing to note that's not in the PowerPoint. We do have about 7 million tons of 1.17 grams per ton in the dumps. And so we're trying to mobilize a special type of drill there to be able to, a sonic drill, to be able to verify the grade. But we believe there's about 250,000 ounces of gold that are not included in our resource that could be put into production very quickly by tolling it or something else. So we're looking at ways of getting some type of economics out of that. So
you mentioned sending your geologist down there. Has there been issues with COVID in getting to the property, and has that affected you guys in any way?
For sure. I mean, COVID makes travel complicated. For us to get to the project, we need to get the geologists tested and be able to show when they arrive in Chile that they are free from COVID. So that's one of the things that we need to organize and do, and that's why we were planning to leave at the end of November, and then got delayed because of Thanksgiving and also arranging all the testing necessary. So yeah, COVID does impact travel, obviously. The good thing is most of our team is already located in Chile, so that makes life a lot easier. You know, our senior geologists, VP exploration that will be announced shortly. We just hired a VP exploration. They're all Chilean based. Our general managers in Chile, so it makes life a little easier.
For sure. So here's a question. If you had to build the infrastructure from scratch today, how much would that cost?
So the existing infrastructure, according to David Lang, is somewhere between 150 and 200 million US. And
Wow.
so, you know, we're sitting with a market cap of somewhere around 60, 70 million dollars with 10 million in cash almost. And just looking at what the infrastructure is worth, you know, we're highly undervalued. And of course, even just the drilling work that was done is almost our market cap. So yeah, it's
That's actually a question, if I may interrupt. How do you explain the market cap? It seems very low compared to your assets and resource potential.
yeah. So I mean, our market cap, our stock has been under pressure. We had some financings come free trading. There was one large holder that exited a position, unfortunately, and caused a lot of pressure on our stock, which is, you know, upsetting to me because our stock was trading above 250, and here we are trading at half that price. Our last institutional round that we just raised, 4.5 million, I believe it was, at $1.60. Our management team came in at that $1.60 round and believe that there's, you know, 10 plus bagger potential for the company at that time. And so, you know, it's unfortunate where our share price is for our existing shareholders. There is huge opportunity and upside. We're trading at the lowest end of our bandwagon. We're not doing a financing. We've been knocked on our door by 3 major funds, 2 of which everybody on this screen here would know who they are. They're well-known people that want to offer us money. We don't really need the money, and we're not going to take money at this point in time. Also, this presents an opportunity. We are starting to present to some funds that will come into the market and pick up a position here and kind of clean up some of the shares that have come out from some of the financings here that we've done. And obviously, there's, you know, the gold market's come off a little bit here. It presents a great buying opportunity, I think. The economy's not changed. COVID's gotten worse. And so I think, you know, gold's a very safe place. And silver, if people love silver, we have 62 million ounces of silver. So pretty substantial amount of silver as well, which I like personally.
Yeah, there's a resurgence of that as well. How much of the warrants and options are owned by management? You mentioned that you guys came in on the financing, but do you have numbers?
I don't have the exact number. I'm trying to work through that, but I can say there is out of the shares issued outstanding, there's a pool of about 15 million shares that the project owners own, and we have that under a lockup and a ROFR on that stock. So 15 million of our 51 million shares issued outstanding are due to the project. And then from the board and management team, we own about, I'm guessing somewhere in the vicinity of 3-4% of the company directly. And then our friends and family, I think I pulled the numbers together, was about 6.1 million. So we own, you know, there's about 21 million shares and 27 if I include our institutions. So over half the company is owned by institutions, by the project owner and the management and advisory board, because everybody in the company is an investor in the company. And some people don't report, so I can't really disclose the information. But we own over half the company with our institutional investors.
Excellent. We have here, thanks for the presentation. Do you have geophysics over the project?
There's been a lot of work. There's a lot of geophysics. We may look to do some newer technological geophysics on the project. We have a lot of data. AMEC Engineering did a lot of reports. They did a scoping study. They did range report, which talks about the range of the project and puts out numbers that are crazier than what I said from our target. So we don't talk to those numbers because it's a long ways off. But yeah, we have a lot of data on the project. I mean, the project's had 1,700 drill holes on the project.
Yeah.
So it's been.
Okay, so here's a couple of questions. They're a little bit all over the place, so bear with me. If you needed to go into production, if you needed to put it in production, do you have a team that could?
Yes.
Okay.
We do have the team headed by David Lang, who is our chief engineer and who actually put this into production back in 1988 for Shell. So we do have a team, and we do have some people in Chile that we've spoken to, because there is some people, pushing for the price of gold here at $2,000 plus gold. And hopefully if Goldman Sachs is right, or Bank of America, we'll see 2,300, 2,500 next year. It would be quite a profitable enterprise. One thing to note, typically projects in Chile are somewhere in the vicinity of 800 to 950, so 850, $900 per ounce production cost, cash cost. So you're under $1,000. So as long as gold is sitting at 1,500 plus, this is a very robust and very profitable project. Obviously, where we are today, the environment we're in for the next 3 years, where most people believe, including myself, will be at $2,000 plus gold, makes this incredibly profitable. So
even more of an upside. So here's another one. What percentage of the drill core has been assayed? Is there potential to unlock more ounces through looking for nuggets in your existing data? And then, were you pretty positive about the data and and how comprehensive it is? Ooh, that's a big one.
Yeah, so all the drill core has been assayed, and it's sitting in a core shack on site, and that's one of the things that our resource geologist is going down there to see, Scott Wilson, to take photos and pictures of the core to see the condition. Although we do have good pictures, but they're not as clear as he'd like, and we want some video. But the key to increasing the grade isn't about nuggets. It's these brown breccia pipes here. These are the high grade breccia pipes that have not been drilled properly, and they have not been drilled to depth. So that's kind of where the focus would be, on trying to increase the actual grade to the overall project.
Excellent. So are there a lot of warrants that would be exercised?
So there is a lot of warrants that are in the money, and they are callable. We don't call them in because we don't need the money, and we wouldn't want to put additional pressure on the stock. They trickle in as people, I guess, decide to exercise them. If there was an event that required us to call them in, we would. If some funder came to us and said, hey, we're going to give you X at, if someone said to me, hey, call in the warrants and we'll buy it all off the market and give you $10 million at $2 plus, and they're strategic, we might think about it, but we don't need the money. We're very well capitalized. We're over capitalized right now.
Okay, excellent. What are the classifications of the mineral resource, and what are the cutoff grades?
Here's the global historic resource, and what we use a 0.3 cutoff, which is where we get to 4.1 million ounces of gold and 61 million ounces of silver. If someone's interested in higher grade projects, we've had some investors say, oh, well, this isn't high grade, it's not a gram. I just easily just say, hey, let's use a 0.5 gram cutoff, and you're at, with the silver, gold, copper, you're at 1 gram a ton, and so you're sitting somewhere in the vicinity of about 4 million ounces of gold equivalent. So we can take the overall resource down a notch. Still a very significant resource at a higher grade if that's necessary.
Excellent. Paul, thanks for joining us. Do you have a question or two for Mark before we wrap up?
Yeah, I do. I'm just, is there any tax on the gold from the government once you start producing? I mean, what's the deal with the government, like to get the money out of the country, basically?
Sure. I mean, with Chile, that's not an issue. There is always a tax. One of the benefits of the project, because there's been significant investment, we have a tax loss carry forward in because we bought the original holding company. I'm not at liberty to disclose the numbers yet because we're auditing the numbers to make sure, but I don't believe we'd be paying tax on the production side in the first year or two, which would make the project even more robust. So great question, Paul. There is 8-figure tax losses on the books that we would offset against any tax payable to the Chilean government.
All right, perfect. Now, is there anybody around you? Any majors, any small companies around you?
Not in the, there is some small companies in the area. There's a private company that's currently drilling that has something they believe is similar to Choquelimpe on a smaller scale. And we are in the northern part of Chile. So there is other projects in the countries above us. But there isn't anybody in the nearest vicinity. It's a large project, 27 square kilometers.
I guess my question was, would you be able to mill for people around you? I guess that's what I was getting at.
Yeah, so that's one of the things we're looking at. We've hired a group to help us look at leverage. We've been offered a bunch of cash for the existing heap leach, the dumps that we have, and we could cut a deal with someone to be able to toll mill that, and we're exploring that. Someone's offered us a big cash to acquire those dumps, but we're not sure whether that makes sense or not. It's
Okay.
it's
Now, one last
there's
question.
too much money in the ground there there 250,000 ounces is $500 million of metal and 250 million in profit if you use $1,000 for processing. That's a pretty significant amount of money. So we're trying to find a way to leverage it, actually.
No, that's what I thought. If you could mill for people, you got some income coming in.
So we are looking at that, actually. That's
That's
exactly what we're doing.
Yeah. So to wrap it up, the last question: what would the timeline be to production, and what would the initial, what's the initial capex? Specifically, the cost to restore the existing infrastructure to get everything up to speed, because you have an existing mill and all and everything else. What would it cost?
Yeah. So number one, timelines. We believe that we want to drill about 50 to 60,000 meters over the next 24 months to get this ready to a production decision. And then number two, we have not put together a model, an engineering model yet on what the capex would be, whether that would be 70 million, 100 million, 150 million to put into production, because we haven't figured out the right numbers of ounces per year that we would mine. So we still haven't had, I guess, the numbers that we're willing to put out officially yet.
Right, then the wrap-up question be: what is the condition of all the existing property, like all the infrastructure? Has it been always on care and maintenance, or?
Yes. So one of the good things of inheriting this from COPEC, which is a very large company, we basically, they've been running the mill every 3 to 6 months. So the mill's in actually great shape. There's even some new equipment on site in boxes. They told us don't throw out any of the boxes. So the mill's in great shape, but we would have to put in significant investment to increase the capacity of the mill to really get it to a proper production scale that we would want. And that's where it goes to your original question of what the cost would be. And
okay,
I don't even want to guess, but
that's fine. I understand. Yep,
it could be anywhere between 70 and 150 million, somewhere in that range would be my guess. But we really need to do a real engineering scoping study to figure out what we would need to put into it. But the infrastructure is in great shape. Backup power is in great shape. Power line, we've got full power line to the project. It's all been paid for thanks to a much larger entity in the past.
Okay. Well, Mark, this has been a great presentation. You got a great story in front of you. Thank you, everybody, for the questions. They were very much appreciated. We'll be following you for the next 4 months, if not longer. Thank you again for your presentation. And thanks, everybody, for tuning in. Appreciate it.
thank you everybody for the opportunity, and thank you, Paul, for allowing us to present, and look forward to following up with you people. And if
Thanks so
anybody has any questions, reach out to Paul, and we're available. We can definitely get in touch with any of the investors that have any questions, or if anybody needs a copy of the PowerPoint, we can send that off to them.
They'll all be receiving it from us.
Perfect.
Thank you
All
so
right,
much.
take care. Thanks, Mark.
Thank you.